just to set the context, the intention is to have like a real discussion of the quality that you might have on Monday morning on a topic that matters to SaaS founders. And one of the topics I think for the past few months that we have heard come up very consistently is this entire question of where and how do you structure your business. I think people who are just starting have this question as well. Let's say you're a couple of years into the building phase, you start getting to customers in the US, and then sometimes you also have questions that come up from that perspective. And there is a lot of what I call FUD, the fear, uncertainty, doubt conundrum that comes in over here. So the goal was to get not two, this time 3 people to get perspectives from. To start with, Shashank, when you were thinking of, when you started Spotdraft and when you were thinking of where to domicile the company and how to structure it, at least what were the trade-offs in your mind? And therefore, what choices did you end up making?
Yeah, so I mean, the trade-offs were, so for context for people who don't know what Spotdraft does, we are a SaaS company where a majority of our business is selling into the US. So one big trade-off was the brand perception that happens. You're a US company, you're a local company as opposed to a foreign company. There is a little bit of a bias that comes in. That was number one. Second was there is a lot of back and forth travel that you need to do in order to, if you're India domiciled and you don't want to flip the structure, then you'll have to do a little bit of travel. I mean, there are ways to get around it, but yes, that was one because going to sell, but then again, there are a number of days, so it gets a little hectic. And this entire piece about hiring and managing global employees is quite difficult. And the last one is RBI being RBI. You have to prove that you're not a fraudster and that you're going to do the right thing. So the way regulations are set up is it's set up for you to prove that you're not guilty, and that just leads to a little bit of issues and some delays in how it gets done. Thankfully, we've got Amit on our side, so we keep asking Amit for all the right answers.
Understood. And one just follow-up question on that one, without again getting into the specifics, do you think there are choices you would have made differently? Or considerations that you thought were more important, which were not as important, is actually what I'm trying to understand.
Sorry, absolutely not. We would not have made a choice any differently. And to give you context, Madhav, Rohit, and I, all 3 worked in the US right before coming back to start Spotdraft. And the intention was to build a world-class company sitting out of India, right? Not just namesake, but in actual form and substance. So we came with that belief, and that was really, really strong for us. Then there were other considerations why we decided to remain in India. One is on the investor side, and second is on the company and product side. On the investor side, because we had already raised a bunch of money before we formally decided to flip, what ended up happening was it would have led to some tax leakage issues for our existing investors, especially the Indian ones, because of the flip. That was issue number one. The second thing was there was a lot of back and forth and confusion on where the IP would reside. We wanted the IP to reside in India. That's where we wanted to build. That was the second thing. Third thing is, let's take a step back and what is the general perception on why you need to raise in the US? And the general perception is it's easier to, why you need to incorporate in the US. It's easier to fundraise, that's one. And the second reason is your exit becomes easier, right? And especially with an IPO. Fundraising, and we did a detailed analysis of this. If you go beyond Series A, the investors who invest naturally in India are the same investors who are investing in a flipped structure in India. So there is there was an 88 or 90% overlap in those investors. So you're not losing out on a bunch of investors. That is the reality of it. Second, you have growth stage investors in India willing to invest in vertical SaaS or other businesses that are focused towards the US. And the sort of third thing is we saw Gift City being there and foreign portfolio investors being able to invest in India. India is an attractive market. If A Zomato or a Paytm can get listed. A Whatfix and Spotdraft can also get listed. You anyway, with this flip structure, you don't get to do some of the, at least you don't get to do some of the more fancier ways of structures that you would do if you were purely US domiciled. That was so it didn't really add any value, and eventually you can do ADRs or other hybrid instruments
Understood.
to realize value for your investors. So all in all, the reasons for being a flipped structure from a purely economic perspective did not hold true for us.
Got it. And Abhishek, one question for you, which is, if let's say today a SaaS founder who is starting up with the goal of building a global company, which in the near term will target the US market, were to come to you and ask you for advice, saying, look, right now the world is my oyster, I can make whatever choices I can around, again, both domicile and structure, what would your advice be?
Firstly, I normally tell them to go back, sleep over all their questions, and come back with whatever remains, right? Because I think there's just a lot of impulsive kind of questions that often pop up to us. But on a more serious note, I think what at least I always tell founders who approach us, and while, as you rightly said, it is logical that they should be approaching us at the start of their journey, but we actually have companies at all stages who keep going through this dilemma. So actually, it's not a dilemma that somehow goes away. And I love what Shashank said, that he's not had any second thoughts, but I think he's probably a minority because many other founders keep debating whether they did the right thing. But I would just say, sort of wearing the subject matter hat that I wear, is that your decision should firstly not be based on tax considerations, right? So counterintuitive to the business, that's okay. Therefore, if you don't need my advice, that's great. But firstly, if you're making money, you will have to pay tax somewhere. So don't try and create exotic structures, assuming that I can avoid tax and this, that, and the other. And this is not just sort of first principles advice, but it's also based on where the global world is moving in terms of trying to have minimum tax rates and plug every possible avoidance. So that's one. Right? The second thing I sort of generally tell them is that what worked for Peter doesn't necessarily need to work for Paul. So don't try and if you live in one of those fancy gated communities of Bangalore, don't say that my neighbor did this and therefore I'm going to do this, because everyone's facts are different. As much as the facts even appear identical, there will be a lot of nuances. And the third thing is, obviously, in your question, there was an assumption that somebody's building for the US market largely. To that extent, I agree what Shashank said, that it helps to have a US company, because customers, they like to contract with a local company, whether it is for reasons of tax or data protection laws and just contracting laws, etc. So there's definitely an ease of doing that. But even there, what we tell founders is follow first principles of what I would call supply chain, right? That if you're building a product, there's your product development, there's your engineering, there's your marketing, there's your sales. What is going to happen in which country, right? And where are the sort of leaders around all of those functions going to be based? And use that again as a proxy to decide where you want your headquarters to be. And I also give them the example of several large, and they may be in IT services, but there's no reason why they could not be product companies, where even if you are an Indian headquartered company, nothing stops you from setting up your subsidiary in the US, for example, to do US market sales, and the customer would still see a US company on the other side. So pardon me if my sort of answer seems a little biased towards setting up in India, but all I'm saying is that there is sort of no one size fits all. And you need to keep thinking of it. And again, as much as you started saying that this question comes up every other day, believe me, we also get questions almost every other day of companies wanting to reverse flip into India. So this journey is going to keep going on.
Very interesting. No, thanks, Abhishek. Amit, next question for you, which is, I know we evaluated a flip at Whatfix at one point. Not like, without necessarily going into any specifics, again, if you could just walk us through why we thought of the flip and how we evaluated the trade-offs at that point of time. I think that would be very helpful.
Yeah, maybe I'll start off with a question for the audience because a lot of them are budding founders. Would anything be different in the last 4 quarters, hypothetically, if you were a US headquartered company or anywhere in the world? The answer is no. So what's the underlying current for all of this? Pure business fundamentals will make any investor drop any amount of money, any part of the world, will make a solid product, will make any customer at any part of the world buy your product. So I think the story is, can you build a successfully fundamentally strong business? That is point number one. Coming to your immediate question, Arpit, yes, we did. In fact, we did it in most of our fundraisers. Each new investor that would come up would ask us, hey, did you attempt a flip? And our answers were more or less ready. Of course, we couldn't attempt it because we did raise cash from Indian institutional investors, and therefore, similar to what Shashank said, where does IP go? IP inflated too much, there's tax outage, there's cash outage, etc. And therefore, we did not go for the, at least our most recent fundraise, at least that investor thankfully was on our favor, saying that, okay, don't attempt a fundraise or don't attempt a flip for the fundraise. So that was good. Now, coming to the part of a little bit on more operational challenges, would anything change if we were US headquartered and hypothetically we did do the flip? My answer would be no. And the reasons are, I think if you go back in time, startups would want to go to the US because all of the tech evolution happened there. The ideas came out from there. The people that had the money were there. Startup evolution also happened from the US. It was not something that was born out of India or any other continent. So it was a lot more easier to float an idea to an investor who had money, get the money faster, and then propel the business. Move fast forward to maybe 2-3 years back. Any idea has value today, regardless of location. We are an Indian parent. We are selling across the world. I think I have a handful of customers that I can count on my fingertips that are Indian based. All of my other customers are outside India. Similar to what Abhishek said is that we have an Indian parent, we have subsidiaries outside that does its job. Now, what is the job of the subsidiary? As a very large customer, what do you want? You want somebody to reach your office at their beck and call or go for a meeting and troubleshoot the problem. By setting up those subsidiaries, you can create pseudo sales centers, pseudo customer success centers, and make them do the job while all of the heavy lifting still happens from India. Customers, at least what I've seen from my 6 years at Whatfix, is that there's no issues in terms of contracts. People do understand that you can be an offshore company. They are very, very open to negotiation when it comes to nuances specifically to an Indian parent. Money wiring is no longer a problem. We have the availability of all forms available, and customers across the globe understand what it takes to do an international wire. Banks are become a lot more open-minded in terms of exchange rate flips when a USD comes into INR where you can further negotiate. So I think the entire evolution of the ecosystem to do cross-border, right from investor to a banker, has so evolved that quite honestly, I'm happy that we didn't do the flip. Of course, there are negatives to this. The negatives to this is that our government itself is not evolved to such an extent where documentation can become easy, which means that if I have to do a fundraise, there's going to be an enormously large SHA, there's going to be an enormously large SSA. Legal teams love to debate on it. That fundraise gets delayed. Of course, that nuance is there. Coupled with that, I can't get the money even if the SHA and SSA is signed until and unless I do a bunch of filings with MCA, which can also prove to rejection. And then if there's a rejection, then the money gets stuck. Taxation is there across the world, whether you go to the US, whether you're in India, tax is something that you have to pay. I think the only downside is, I think, the documentation or the evolution of doing business when it relates to government filing is what I feel the downside is. But apart from that, I don't think going to a particular location makes that much of a difference. Even to add, if you're actually selling to a currency that is more powerful to INR, and if your cost base is in INR, there itself you have a huge arbitrage. So flipping that back to say that should you go to the US, incur cost in the US and get revenue in the US is a question that people may want to think about.
And Chetan, the one question I wanted to ask you given the number of patterns you have seen of different types. And the same question as Abhishek, that I had asked Abhishek, which is, today, if you were to find an early stage founder who was thinking of starting, what would your advice to them be?
Yeah, hi. More or less, I agree with Abhishek. When we discuss, we evaluate companies, then we again go back to the drawing board and see what are the requirements. Broadly, I would say what are the business needs is what we should concentrate firstly on. Taxation will be there, but that has to be secondary. What are the business needs? Where are your customers going to be? What are their preferences? Would they like to engage with the US entity for contracting and all? That can be a subsidiary also, like in the case of Whatfix. That is, where is your IP going to be? What are the taxation implications, not for the founder or the investor, the business tax? That includes your transfer pricing, cash flow also. And poem and talent. These two are the other two things which the founder has to keep in mind. While the two major things which get discussed mainly are what are the investor preference, what is his tax implication at the time of exit, where is the founder going to be whenever he exits, where is he going to be, where is he going to pay tax, and all those things gets discussed first. I think, like Abhishek mentioned, the business needs should be addressed first.
See, I think those are a lot of questions to a question. And I think it's vague. So let's take an example, because I think lots of founders are on a call here. And at least those who are at a very early stage, I know that they all have to make this decision. So let's assume a company, you're starting off. You got 3 founders. All 3 founders are in Bangalore. I'm just making up. It could be Delhi, it could be Bombay, Chennai, wherever it might be, right? You are starting your product market fit experimentation. Your early customers, let's say, are in the US, right? That's as much as you know about your business at that point in time. You can't predict 5 years out what it is going to be. And pick a space of your choice in terms of what this company does. Now, you have a choice to make. Whether I set up an India parent with a US subsidiary or a US parent with an India subsidiary. And by the way, this is for any one of you. And I'm specifically picking this because most people on the call are early stage founders. We are not talking about sort of IPO related questions at this stage. How would one advise this person to set up their structure?
So look, happy to go first. And
Sure.
I think based on the what are simple but very common set of facts, if the 3 founders are based in India, and I just add one assumption that if they have no immediate visibility of relocating outside India,
Okay.
certainly to the US or anywhere for that matter, I would certainly tell them to continue with an India headquartered company, because I'm assuming the founders are here, the engineering teams are here, the product teams are here. And even though, as Amit said, if your product is good, there will be enough acceptance for it in the US market. Anyway, as founders and other senior leaders, you will have to make the sales trips and the sales visits to your key customers. Again, there may be a lot of these products which could be purely online digital marketing, in which case you don't even need to sort of worry about where the domicile of your company is, because to some extent, this customer focus on having a US company really comes in very large scale B2B SaaS contracts. If it is sort of a little bit more subscription based, etc., then they really don't care where the company is. So again, I can go on for my reasons, but I would definitely say do it in India. And if there were something very specific, one of the things we get is that so and so investor is ready to put money, but they will not, or they just don't fund Indian companies, right? And I think you can probably know who I'm alluding to. So a lot of this conversation comes up. Now that I think is a difficult one to solve. Now, if that investor is so critical to your life story that you do anything to take money from them, then unfortunately you'll have to disregard everything that I gave you as advice and set up as in the US. But I really don't think that, and thankfully so, that life has reached a stage where there's so much dependency, or there should be so much dependency on that one kind or one investor for that matter. And last point, just echoing again what Shashank said right at the beginning, the pain that it takes today to get an Indian founder to become a shareholder in the US company if it was painful in the past, now it is 10x painful, right? So if earlier you could do all these nice structures of gifts and all of that, those are also plugged. So the pain you'll go through in trying to create a structure will be more than what it takes to sort of create an IPO ready company. So
got it. Actually, can I ask a follow-up question? And I'm actually doing this in the interest because, and I'll get to a few specifics, but this has come so often that if you go back 2-3 years, and by the way, this is for everyone, not necessarily only for Abhishek, so feel free to chime in. At least the conventional wisdom in our industry, I would argue, for the last many years has been, if it's a SaaS company, set up in Delaware and subsidiary in India. I think at least that's a conventional wisdom, right? And I know, Amit, we did not do that in Whatfix, and we can come to the history of that later. Now, as one does this structure, recently people started doing this gifting route. I mean, or that has been the accepted one. Recently, people have started saying, oh, you can't gift to an individual, but now you can gift to an LLP. How kosher is that structure? Or is that also something that can come up for question tomorrow? And in some ways, I am bringing up the point that Shashank was bringing up, which is in some sense the stability of regulations in general. But you are making a point in time called today, but what about 4 years later? So the call you are taking, let's say, of an LLP structure today, will that hold to tomorrow?
Yeah, so if I can just quickly go and then open it up for the others. So yes, you're right. And that's a great example. That's why I brought up this point of gifts don't work anymore. And, again, if I have to sort of make a slightly provocative statement, the regulations that we have today, which somewhat funnily allow round tripping, right, are counterintuitive to every stated position of every agency of the government, right? And therefore, again, if I have to predict a little bit, I think these regulations are short-lived, and therefore these LLP structures, etc., are going to be sort of under stress, which therefore goes back to the point that even if you have to set it up, then you need to really think of relocating, or at least one founder relocating, taking up a job with a subsidiary, setting up, earning income there, and then using that to incubate a company. But I definitely would think that trying to bend and mend the regulations each time is not a sustainable strategy.
Look, and maybe to add to what Abhishek said, I think I agree. And I was going to mention that if there is a catch-22 situation where you're going into product market fit, there are 3 of you, I would say to make one person move there. If the nuance is investors not going to fund you in India, at least that way, with the help of Abhishek, you can do that switch as against all 3 of you all staying here. But again, I think it's a shot in the dark, right? Like you rightly pointed out, we don't know whether it's going to work. Having one person there, maybe at a subsidiary level or eventually at a HQ level, is always advisable, because at least from a logistics effort, you have one of the founding team members looking at the other geos, which is a plus point. Plus, they know the product in and out, right? Because they built it. So even to go to critical customers, this person can then fly out. Logistically also, it makes a lot of difference. So I would actually say that if there is a situation where you're confused, have Indian parent, have one of y'all move there, like Abhishek pointed out, and then figure out the best path forward.
Yeah. So Alok, maybe I'll just jump in, and on the specific question on gifting, I think it's a clear no. All of us and most companies, we did it. There was no clear answer. What we now have, the ODI regulations which came in September 22, is the gray. People are using it, but at some point of time that will be questioned. So just emphasizing again that founders have to think through today and be clear on what they want. Flipping on a later day is going to be costly and difficult for everybody. And if founders think that going to, at least there's a high possibility that they're going to physically move to a location outside India, then they can consider having a company headquartered outside of India.
I want to ask a question. I've seen a lot of startups use a certain product that you can pay with a credit card and incorporate a company overseas. It's a payment processor globally. They have a product that allows you to do that. Is that okay to do? Is that a valid structure to have a US company via that product?
Yeah, it's rare that you can give an answer to a lawyer, but Shashank, I'll attempt that. That's not. No, that's not permitted, Shashank. It's been done, it gets done, but that's not permitted, because if as an Indian resident you need to hold shares in any foreign company, then in the current regime you need to be reporting it and you need to be falling under one of the two regulations, which is the ODI or the OPI. So just paying somebody a fee and asking them to do it on your behalf is not kosher.
And Shashank, to add to that also, what I feel is that why we may do all of this fancy gimmicks in the start of the company, as the company evolves, one is that you already have a nightmare of compliances that you have to deal with. The last thing that you want is to undo something that you've already done 4 years back. That's going to be a larger challenge. So who's then going to focus on the business? So that's another viewpoint that founders may have to think. There are quick shortcuts, but do you want to take it? That's another debate.
Correct. Okay.
And Amit, one question as a follow-on, and it's several people have asked that in the Q&A as well, which is, and if you could take any one example of what is involved in undoing actually some of the choices that you have made. So it could be, let's say you were incorporated in the US as a headquarter and you want to flip back to India, or maybe the other way around. From a tax perspective, what are the implications, just the time it takes, and operationally, what impact does it have? Because do you need to recontract stuff with customers and so on and so forth?
So on the tax part, I'll let Abhishek comment. He's the expert, but I'll tell you on the operational part. While we were attempting this and thinking about this, the problem is that you have several large customers that are midway through your contract. Now, they may be very particular about the fact that I signed the contract because you're US HQ. Now, if you have to undo all of that, firstly, it's operational nightmare for your finance and legal team. Point number two is that you're risking your entire business itself, because that opens up an avenue for churn for the customer. Things may be going well. You have a 5-year locked-in contract. You're secure for 5 years. There is stable money that is coming in. You're trying to improve the customer experience. The last thing that you want is an email to go to customers saying that, hey, listen, I need to flip. I'm going to undo all of the contracts that I had with you. And please note the problem with a lot of large customers that you still have a very elaborate vendor onboarding process.
Yeah,
They don't like to do it repetitively. They don't like to do it when you're first time onboarded as a vendor. So forget about repetitively. It's very elaborate. To get them to do this over and over again is a recipe for disaster. So forget about the flip part, Arpit. I mean, even if you want to change your name for some reason, you need to go through the same grind of going to customers, telling them, my name was ABC, now it's XYZ. My PAN is the same, my GST is the same, all my other registrations are the same. They still have that question mark saying that I don't know whether you're the same person. For me, I don't understand what PAN is. I'm sitting in the US. So prove to me how you and that person are the same person. And we attempted that name change. Previously, our name was Quico Technosoft Labs Private Limited. We changed it to Whatfix Private Limited. That problem is still there because you need to undo all of your W8 bennies. You have to undo all your W9s. You have to undo all your vendor registrations. You have to undo all your invoicing. The PO needs to come in the right name because the person issuing the PO versus the person releasing the payment are two different people. So procurement may think, yes, I know ABC is XYZ. It goes to the AP of the customer and the customer and of the customer team, and the customer team is saying, I can't even release your payment because I don't know who you are. So come back on a call and verify your bank account details. So I'm giving you an example of a name change. Can you imagine the quantum of a flip? So that's operational nightmare plus risking business impact totally. But on the tax side, I'll let Abhishek comment.
Got it. Thanks, Amit.
No, happy to chime in. Although, if after listening to everything that Amit said, if someone still wants to deal with the tax issues also, then yes, what I say becomes relevant. But, just sort of to answer your question, especially Arpit, flipping from India HQ to, let's say, US HQ is easier. And if I had to just put it on a scale of 1 to 10, I mean, it's sort of with 10 being difficult. If you do it, early on, let's say first 2-3 years of your life cycle, it's probably as easy as 2 or 3. But I think even at a really growth stage, or even if you're 8-9 years into your journey, it becomes like 7-8 on the scale of 10, right? But the reverse flipping, I mean, even if you want to reverse flip 6 months in to your life cycle or 6 years, it's like 11 out of 10 complexity, right? So that's so reverse flipping is much harder. That said, I think it's also harder because some of these countries, particularly the US, have more evolved legal and tax provisions on exits and so on, right? So if there's a company headquartered and you're exiting out of that jurisdiction, then whatever is the valuation or value of that company, you have to pay tax on exit. India doesn't have some of these specific provisions, right? So sometimes the reason why it's easier to flip from India outside is because you're then interpreting other provisions and trying to fit them into a flip. But again, if you know the sort of government stance on this, where they don't want flips to happen, in general, it's quite likely that they will tighten the laws, in which case even the India flip outbound may get harder.
But maybe one more point that founders may need to think about. While we were doing the flip, and because we got tremendous pressure to do the flip round after round, so we spoke to a lot of founders that did the flip. And the success rate, I think, was, with all due respect to Abhishek was not part of that consulting list, but there were other consultants that were there. The hit rate was, I think, 2 out of 10. I do know one founder of a very evolved company, of course, I can't name them on the call, that they tried to do the flip and the company was doing really well. Because they did the flip, they got stuck in between the process with some regulator. They were almost running out of cash, and then they didn't know what to do, because where does the investor put the money? The investor puts the money in the 2B HQ company. Does the investor put the money in the current company? That leads to a lot of problems, and that can shatter dreams of a business overall, because then you're so stuck that you had a killer product, you had a stellar team to do all the execution. You tried to do a flip, it didn't work, and now everything is out the window. So I think, like Abhishek said, if you have to take that call, you need to take that call pretty fast, because you don't want to reach a stage, because investors also and market in general, after a certain point, it's not about the idea. It's not about normalized growth. It's not about you burning 5 million against 10 million. Investors now want you don't burn anything. Your EBITDAs are positive and your growth is rock solid. So in that situation, you don't want another boomerang coming your way, now putting your entire business at jeopardy.
Understood. Maybe I'll pick one question from the audience which just came in. This is from Rahul, which is that so far the conversation seems to be focused only in the US. What about the implications of having the company headquartered out of Singapore versus India?
My answer wouldn't change operationally. Abhishek's tax part, I don't know, but for me, operationally, I don't think anything would change. I would still hold to my answer, regardless of the location. Also, I think Singapore is now become a fast route for Indian companies to go there, but I've also heard stories of large angel investors having stake at a Singapore company got bought over and money still not hit their account. And I'm talking about acquisitions that happened maybe 2-3 years back. So is that also another issue? Maybe, but I think it's just the fastest route for a pseudo US, I think, is Singapore. But Abhishek, maybe on the tax side, I don't know how different it is.
Yeah, so I think there are no material tax difference. I agree with you, Amit, right? You have to still follow your transfer pricing, and you have to still make sure that the supply chain principles are followed. I think the only both advantage and disadvantage, obviously, it's closer to India. So, from that perspective, if a founder doesn't really want to, move away from India, but still wants to be in Singapore and show some substance and presence, that it's easier. But the flip side to that answer that I gave is that it's very hard nowadays to get your employment pass, and certainly even harder to get your PR in Singapore versus, it's much easier to get an employment visa, H-1B in the US. But at a more fundamental level, there's no difference. And people just pick US and Singapore as the two obvious choices from time to time, particularly sometimes for Web3 companies and others. The UAE comes up as a choice. I don't think the first principles change at all. If first principle answer is I want to be an external structure, then maybe it warrants a little more analysis on which jurisdiction based on certain other factors. But it's not that on first principles, if I put Singapore in the mix, the answer will come out different versus if I put even Ireland in the mix for that matter.
Understood.
Yeah, just to add, Singapore or US, it's just a placeholder. It doesn't change. But if you should not have your company in Singapore and all your customers are in US and your team sitting in India, so it doesn't solve the problem at all. It's better to have, in that case, at least be in US or India. So choose that way.
Got it. One specific question for Shashank, which I think can also then be helpful for the entire group, which is, if you could just describe, at least at a high level, what the Spotdraft structure is, and again, implications of that.
Yeah, sure. I can do that. So Spotdraft is an India holding company, and it has a US subsidiary, a wholly owned subsidiary. We have employees that are employed both in the India company and the US company, depending on where they're based. In the interim, before the subsidiary was formed, we had employees who were not in India, and the way we got them on board was we use Deal, which is an employer of record, and use that to get them in. There are issues with that around ESOPs and how those are structured. In fact, Aeka Advisors actually gave us advice on how to do that better. And then all the US payments, and I saw some questions, all the US payments would come in to the Indian company before the sub was formed via Stripe. So there were no issues there. We could do recurring billing. We could do, transfers directly into bank account. That was possible. And then now it's the US sub that does all billing for non-India, and cash flow is sort of managed out of there. So India does a lot of the thing, and all the investment came into India. We transfer money to the US to meet cash flows, and those are met either with a combination of money that is supplied via India and customer money that comes in. The other advantage of doing that is if you're an India holdco, the payments that you need to make to vendors outside of India are just, you need to add that TDS piece, and it just is a mess. You can there are certain advantages of making that payment directly out of the US sub. I think Amit, you can add some pieces to that.
Yeah, I think it's similar to what Shashank just mentioned, Arpit. So over here, the end goal is you want to be able to not have long-term returns that needs to be filed on a monthly basis, specifically the withholding tax. So what we do is now structurally plan the cash flow of the Indian parent with all of the other subsidiaries. We have a lot more subsidiaries which that are there globally. And what we do is, basis the geo in which the customer is located in, ask that particular customer to pay it within that geo, which means that for an FX side, of course, in this market, INR and USD, everybody knows what's going on. It's a lot more helpful in that way to plan your cash flows in advance. So that's another advantage to have subsidiaries. I know the topic is whether you should have a US parent or an Indian parent. I think you should have a subsidiary regardless. It adds a lot more advantages that meets the eye. So that's how we plan it. It's a little bit more evolved than Shashank's, just because of the stage of the company. But there are no challenges in doing that, both from a vendor side, basis the geo, as well as the customer side basis the geo.
Just quickly adding one point, Arpit, since it's a lot of early stage founders, one of the mistakes we've seen people make is that, okay, let's say they've set up in the US as an example, and they realize they need an Indian company. Many times they don't set it up as a subsidiary of the US. The same founders set up another Indian company, or vice versa, right? They've set up an Indian company as 3 founders, and then they realize they need something in the US, in Singapore. They set it up again as a new company owned by them. So that becomes a big issue, because then at some point in the future, value is not consolidated either at India or US in this example. And getting that done is again very, very tax unfriendly and complex. So make sure you do a parent subsidiary, whichever way you have the headquarters.
No, thanks, Abhishek. That makes a lot of sense. I know that was also a couple of the questions alluded to that. One other question, which is, and I think a couple of people have asked that also. Sorry, there's so many questions. Which is, if let's say you are US headquartered with an India subsidiary, this entire concept of place of effective management and what implications does it have? And if I were to give 2 examples, one is, let's say all founders are based in India. There could also be another case where, assume there are 3 founders 2 of them are based in the US, 1 is based in India. If you could just walk through maybe a couple of at least these scenarios that founders come up with or come up against in some sense quite often, and the implications again for the structuring part.
Sure, but I'll try and keep it short and simple. I mean, poem is a very evolved topic, but let's take a quick set of assumptions to your facts. One is, so let's assume that the revenues are all booked in the US, right? So US headquarters, India subsidiary, and let's assume all the customer billing is happening out of the US entity, and therefore the entire top line is sitting in the US, right? In that fact pattern, if all the 3 founders are sitting in India, in general, I think, again, as a rule of thumb, it would be very hard to establish that the US company is truly a US company, at least from an India tax perspective. And the finding will typically end that the company is managed from India, hence its place of management is in India. And that entire revenue, whatever is booked in the US, should get taxed here. It may not create an actual cash tax for you because, the company may not be fully profitable and so on. But yes, if there are revenues there, if there's no real management and substance there, just showing paper board minutes and all of that doesn't work. Of course, the second scenario is that if you have one founder there and that person is living in the US in this example, that's good enough. You don't need all 3 founders to be there. You don't need, all board members to be US citizens. So at least if you can show that there is somebody in control in the US who's genuinely living there, then I think we should be in better shape. There are other impact of, where the place of management finally settles. But, I think this is the most important one. And I just try to keep it as simple as possible.
I want to pick up one question from the Q&A panel that has come here from Jaideep, which is that at least I have experienced a lot of companies who wanted to flip to US from India for fundraising or other sort of questions. Is there in what scenarios will a company look to flip back from US to India? Outside of, let's say, fintech regulations, etc. But, and Abhishek, you did mention that you have a lot of those conversations. I'm more trying to understand why founders are looking to do so.
So
please.
Sorry, go ahead. Go ahead, Abhishek.
No,
go ahead. Yeah. Go ahead, Shashank.
Yeah, so I mean, I can tell you one reason where in the initial days it would not have made sense. People want to go and crack the US market, but they don't really know whether they can eventually crack it or not. So it's important to go and see traction there and whether that is the ultimate geography where you're going to see the highest amount of traction. And we've seen a bunch of other SaaS companies in India that have mostly India or Southeast Asia, revenue. So that flip makes more sense if you end up having a market that is non-US. Yeah, at least for and we did anticipate that to happen because our initial traction was very India focused, and it would not have made tax sense for us to move to the US at all.
Understood.
Abhishek, over to you. Sorry.
No, not at all. Just to add to that, to your question. So I think it's again goes back. So if it's fintech is because of regulations, it's also because those fintechs are building for India, right? For the Indian market. So I'll just use examples, obviously not naming the company. There's a, brand roll-up company that wants to flip because they're saying we're rolling up all Indian brands. So why are we headquartered outside India, right? There's a company which is into fashion and apparel, and they're saying, where our production is here, our target audience is here. So what the hell are we doing being headquartered in Singapore? And of course, the other thing, and I'm no capital market expert, but, and this was mentioned earlier on, if, and after the listing of Zomato, Paytm, the other sort of bubble that's burst in a sense is you can't list some of these companies in India.
Right.
We know the other big name on SaaS, particularly that's facing some headwinds of having listed outside. And also the point which I think people are now realizing is that, unless you're going to create a really, really blockbuster IPO in the US, your IPOs in the US scheme of the market is going to be so small that you'll end up with a much better valuation. And even if you see, IT services today, and again, I'm just throwing some rough numbers, but, TCS's market multiple is significantly better than Accenture's market multiple in the US, right? So I think even from that perspective, Indian markets are giving you better multiples now.
And also, look, I feel another point to note is that while valuations and all of that is good, hypothetically in the US, your company needs to be at that scale in terms of the revenue for you to even be noticed, just because of the quantum of the players that are there that have significantly large revenues. For example, if I'm hypothetically a 30 mil ARR company wanting to list for whatever rhyme or reasons today in the US, having all of the cards right, which is a US headquarter, no taxation, all my IP there, no investor is actually going to bother to look at me at that scale because you have such more larger revenue companies. So is that another reason why you should not be taking this route? I funnily had visited a talk show that was done by Kotak in public markets in Mumbai early this year. And they were talking about how untouched the IPO market in general, regardless of sector, is in India and how that's going to evolve, and just the expertise that they're trying to build into the Indian ecosystem at the time of IPO exit. So I think that evolution is going to happen, but the flip side of trying to get everything to the US is, will you be at that quantum for somebody to even take you seriously, hypothetically, if you want to do an IPO?
So true. Couldn't agree more, actually.
I want to take up one question from Pallav, which is around M&As and is a topic that we have not yet discussed. Let's say you have money in the India entity, and you want to do M&A of foreign companies, could be tuck-in acquisitions, could be strategic plays, could be whatever. Just how cumbersome is the process, if at all it is? Does it need RBI approval or other kinds of approvals for these kind of capital account transactions?
So in general, there is no restriction, right? So it's what's called the overseas direct investment ODI route. So an Indian company can acquire a company anywhere in the world. You can acquire it directly. You can set up an intermediate company and use that to acquire it. I think some of the nuances, having said that, of course, it is certainly more complex than if you had a US headquartered company and from there you wanted to buy another US company, or from there you wanted to buy a European company. So let me not sort of try and glamorize this. Certainly, and I think this point has been made several times, the paperwork, the regulations, etc., are more onerous, but not at a level that you cannot do it. Some specifics now, if you want to leverage, it becomes a little hard to leverage from India to do an overseas acquisition. You might have to create an intermediate company to make the leverage. In some scenarios, if you want to do share swaps, those become a little complex and things like that. So harder to do, but not impossible is what I would say.
Understood. Got it. Ashwin had this question, which, where it go? So again, a very specific question. And I again think this comes up quite often. If you could talk about the challenges on fundraising in India, and oftentimes people use these essentially either call options or put option kind of arrangements, where the holding company is in the US and the subsidiary is in India. Especially also, from an IP perspective, are there going to be some questions on housing the IP in the US in these kind of structures or fundraisers?
Okay, happy to chime in quickly. So, this comes in a scenario where the company is, say, US or Singapore headquartered. It has an Indian subsidiary and it wants to raise money from either Indian sort of individuals and angels and companies, or to that extent, even from Indian AIFs. And because of a certain SEBI regulation, Indian AIFs need approval before they can invest into the US parent, right? And therefore, whether you call it the shadow cap table structure or the twinning structure or the put call structure, there are ways in which you can still take the money at the India level, because oftentimes from a cash flow perspective, you still need the money there. And those structures work. So put simply, the way it works is that you sort of take the money at the India level from investor A, who's an Indian party, but you give them a kind of shadow position as though they had invested in the US cap table, and have agreements that, whenever there's an exit, etc., they would get an exit equal to what they would have got had they come onto the US cap table. So I think it's a workable structure. I'd only say that if you're going to raise 99% of your money from India, then this sort of twinning put call structure won't work. Then you may as well reverse flip and come back to India. But if you're a US headquartered company and you're raising 90%, 85% of your capital there, and there's a smaller set of investors that you want to go after here who can't invest for whatever reasons, then this twinning structure might work.
Understood.
And also I'd say that, the twinning structure is a large part of what we advise on, but I'll also say that no one has seen this go through a bad cycle or the full cycle. So where somebody can get stuck in a twinning structure is still not fully played out.
Got it.
Just
go
to
ahead.
add, sorry, we do this day in and day out, and because of regulatory reasons, if few investors can't put the money in US, they put the money in India. The only blocker, and which is a good problem to have, is if the company goes for IPO, these people will have to flip at that point of time. And like Abhishek mentioned, we don't know what this route is not tested yet. But IPO situation, which is a good problem to have, is one thing which I.
I know we have limited time left and we always promise to end on time. So I have one question which is not in the Q&A panel. But, if I were to broadly think about the advice that we have at least got from the group, is that for the most part, you may be better off being at least headquartered in India, and you can then have subsidiaries globally, etc. They will, as a founder, solve most of your challenges, right? Any views on, despite, let's say, if this is consensus advice, why is there still, I'm more trying to play devil's advocate and trying to understand, why do founders oftentimes have an ingoing bias of saying, let's headquarter in Delaware, as an example? Are there advantages there that we have not yet discussed, or are there some other reasons why those perceptions exist?
Arpit, can I answer that question? Sorry.
Yeah, anybody. I mean, this is always all open.
Because every time we are investing in a SaaS company, we go through this challenge.
I know.
Right. And I think some of these are historically rooted. That because conventional wisdom was the other way around, I think the resistance to move is very high. Sometimes it's just the fear of the unknown. I still think, for example, a lot of founders have the fear on whether they'll be able to do future fundraisers or not. Especially everybody wants to do future fundraisers in the US, and they worry whether that's going to limit. And while I think it has become far easier today, there will still be, by the way, some investors in the US who will not put money in you if you are in the. I don't think all investors are equally okay with that construct. People have had also the concern around M&A, that if tomorrow we are going to be acquired, which is usually 80% of the exit outcomes, if we're India headquartered, will actually many of the biggies in the US even look at us if our company was to be headquartered out of India? In certain cases, if the industry is in a regulatory domain, especially financial services and healthcare, I think founders again worry about the fact that, look, if they are headquartered out of India, will that actually become a bottleneck or not? Some people still worry about customer contracting, even though at least I believe that you can do customer contracts out of a US subsidiary also with an India parent. But that is also, the thing is, remember that at the time you're setting up this structure, Arpit, you have actually not really traversed the journey at all. You maybe have one customer or none, because you sometimes don't even have a product. Remember, you are at the seed stage. And that's what classical seed today is: a team with an idea, no product. So there are lots of downstream questions, and it's the fear of the unknown, where at least people tend to still sort of veer towards the Delaware structure, and without fully understanding the consequences of these structures.
Fair point. I have one or two additional points on that one that we can talk about separately, because I know we have hit our time limit. But once again, I think, Amit, Abhishek, Shashank, and Chetan, thank you so much, as well as to everybody who joined.